So in the last few episodes, I've been talking about what are the different products that I use with respect to, let's say, insurances, or what are the different type of loan when I do my personal finance management, or when I buy a home, what are the different things that I do. So in today's video, I'm doing a similar approach where I'm going to tell you what is the life insurance that I actually own. I will do a separate video later on medical insurance, but today's episode is going to be on what is the life insurance I have chosen, why I have chosen that life insurance, and what are the details of this life insurance. So it's going to be a very quick video on this, so stay tuned. Now first things first, why is life insurance good? Now life insurance, a lot of people have this misconception that it is an investment and you have to get some type of return on it, which is, let me tell you, completely wrong. You should never look at life insurance as a return perspective. You should only look at life insurance from a term cover perspective. What do I mean by term cover? Don't expect anything in return, but if for some reason something goes wrong with you, then there are people who will get the money and they will be happy about it. For example, if I give you, I have a wife and I have a 3-month-old child right now. So I have taken a very big cover for myself only in the anticipation that if something happens to me today, then will the life insurance money, if invested today for a very long period of time with my wife and my kid, should cover for all the expenses in the future, right? So that is how I look at it. But what I'm trying to tell you is, do not look at it from a money back policy, do not look at it from a return linked policy, all of that don't do. Just I would prefer going for a straight life insurance, pure play life insurance policy with a good term which has good riders and add-ons and all of that. So you focus on all of that, and I will show you what I have exactly chosen and what is the sum I have done. Now by the way, this is only what I have done according to my risk appetite, according to my monthly income, according to what I feel my personal expenses, and I also feel what my liability can be. So this is looking into all of that. So it is not like what I'm buying is something that you should buy as well. You have to cater a plan for yourself, right? Depending on your income goals, your future goals, and all of that. So I'm just going to show you what I have, right? So I have something called Max Life Smart Secure Plus plan. I'm going to hide some personal information. Now, what are some important things you should look at? I am at the age of around 31, 32 right now. And if you look at my policy term, it says the coverage is there for 54 years. That means if I took this insurance last year, that means until the age of 84 or 85, this insurance is going to be there. Now, let me give you another disclaimer. It is not mandatory to do this 54-year period. It is very, very, very long. Ideally, you should just have it up to 60, 65. Because by then you have made your net worth enough so that you don't need another big ballooned insurance, right? By then you would have saved up enough money. But I have taken a longer period only because of my personal preference, because I have the extra additional income to do it. Now if I choose 54, then the premium also goes up quite drastically, and if you choose like 60 years ending or 65 years ending, the premium is very low. I have chosen 85-year ending, so the premium is quite high. Now what have I done here is, again, there are two types of options. As you know, there are some premiums that you pay every year. Once a year you pay a premium and you pay it until the age of 60 or until the age of 65. I have chosen a fixed payment term. So I have said I want to pay only over the period of next 10 years. After 10 years, I don't want to pay any more premium. So whatever this extra premium is there for all these years, combine it and put in 10 years. And with this, my policy is done. So I can just take this document and keep it in the side. That is safe for me. Now, obviously, when you do 10-year premium, the premium is going to be higher compared to monthly premium, right? So my premium every single year comes up to approximately 1,60,000 plus taxes. I think with taxes, it goes to 1,80,000. Hopefully, they should reduce this. But as of now, it is 1,60,000 just to insure my life. I have to pay this for a period of 10 years. So if I calculate this over a period of 10 years, it comes to 16 lakhs over a period of 10 years. And then I'm done because I have a 4 crore cover till the age of 85. Right now, if I had chosen a 60 years period or 65 years period, this 1,60,000 would have been maybe 1,10,000 or 1,20,000. But I personally chose a longer period, right? Now, apart from this, I have also done something else. I've added something called accelerated critical illness. Now I'll come to what are these different add-ons as well, but look at the accelerated critical illness. It is around 30 lakhs. Right? And do I get a benefit for this? Yes, I do get a benefit for this. There are other different riders, which is, see, this return of premium option. I've said no, because I don't look at this from a return perspective. I'm only looking at a pure play perspective. But if I choose return of premium, yes, that means all this 1.6 lakhs I will get back if I survive till 85. But the problem is the premium also goes up. It won't be 1.6, it will be 1.9 or 2, right? And then they give you the return of premium back by the time you're 85. By the time I'm 85, which makes no sense for me at that point, getting 16 lakhs in that era, right? So this is basically the main idea, but this document also is quite extensive. There are a lot of things that I should know, not know. There's a whole document. There's a simpler way to do this. Let me show you a quick hack, right? So there's a company called Ditto. This is a zero the back company. So let me show you how to do this, right? Go to life insurance and do something called understand your policy. Now this is very important because you get your entire policy in like few clicks, right? So I'm going to go to my Max Life. I think I have Smart Secure Plus as you saw, and I'm going to click on check now. Now as you can see, this is the policy. This you can also see a video over here which will give you an entire understanding of your policy. So I would watch this video to understand what my policy has, what are the terms and conditions, what I should be aware of, etc, etc, right? Now it also has some warnings here. If you're a smoker, you will likely see that the premiums are more or less in line with other insurers, maybe a little bit cheaper as well, because usually if you're a smoker or a heavy drinker, your premium goes up. I am not a smoker and I drink very less, so for me the premium was 1.6. Now what is important when you look at an insurance premium, right? Very important is which company you're taking insurance from, and each company has a score. It is called good claim settlement ratio. Basically a claim settlement ratio is, if something happens to me tomorrow, does the insurance policy give me the claim or give my family the claim? Because this is very scary. Let's say something happens to me tomorrow. I don't want the insurance company to find some technicality and not pay my children, right? Which imagine that would be the worst thing that would ever happen. So Max basically has a 99.5% claim settlement ratio, which I would say is pretty good, and it number of claims it receives as compared to the industry average of 97. So for me this was a very big decision making capability, and I'll show you other stuff as well. I'll compare it with other insurance policies also, but for me this was very important when I chose the thing. Good claim settlement, good amount settlement ratio, that means they will pay amounts, so that is not a problem at all. Good complaint ratio, so if I have any problems or if they have any problems, they can do it, no problem at all. Now what are the advantages of this policy? So see this is the advantage, right? I get everything in a very simple view, so let me go through them. One is good critical illness benefit. Now what is critical illness? Something goes wrong with me, some major disability that happens or something really happens, they will basically give me a fixed sum of money every month, right, or every year. So if you're ever diagnosed with some kind of illness, you want your insurance policy to pay a fixed sum so that you can deal with any monetary obligations. Now this is usually there when it is such a big illness that it hampers me from going out and working and I can't make ends meet, so this insurance will start paying me money. So that is again very good because it does prompt payout from the total cover or on top, and it has a very short waiting period. Now I have finished 1 year, so my waiting period is not there. Now apart from that, they have accidental death benefit available. So some policies offer you the option of adding extra protection of accidental deaths, and we recommend customers to choose this without worrying about the specifics. Zero cost option, which is inbuilt, so some insurers will return all of your premium if you forego your policy before maturity, right? So this is again something very, very important, meaning you get all your premiums back while also being protected under the term plan during this time. Top up option is available. Now some policies extend the option of increasing your total term cover even after you buy the policy. This is very important. I want to touch upon this because today I feel that my family would need 4 crores. Now after 10 years, I would say my family would need more than 4 crores. I mean, maybe they need 7 crores or 8 crores. So I don't have to go buy another insurance policy. The same insurance policy I can top up. But again, it's up to you, right? I would prefer doing 2 different insurances. You can also top up your same thing. But if you have two different companies, it is better, right? Because you diversify your risk. Tomorrow something goes wrong with this, you should not be in a bad situation. But all of these things are there. So this is very important for you to go read. And it's not just this, there's any different stuff is there as well. So you can choose whatever you want. Again, this is not a buy sell recommendation on this. So that is something that is very important. Now, Ditto also in fact is very cool, mainly because Ditto is a zero back company, and what you can do in the Ditto, and I'll show you the chat I did, right? How did I find out all of this? How did I actually understand what is a good policy and bad policy? Let me show you. So basically when I wanted to buy insurance, I went to Ditto, and this is me, by the way. I started asking questions, right? Can you give me info about HDFC Life Super? Because this is what I did some, experimentation on online. Then they gave me the difference between all of it. Ditto actually helped me with all of this. How much would it cost? Assuming I want a yearly payment for a fixed limited term. So I said 25-30 should be good. Then they gave me all the different options for that. And then finally they told me what is good, what is bad. And this HDFC seems isn't great, right? Due to the amount settlement ratio is not great. So all of these small things started adding up in my decision making process. And finally, after everything got over, I realized that maybe Max Life would be something better as compared to HDFC Life and this one. I want to show you another image as well, right? Now look at this image. When can we exit? 26th year, 31 year, 25 year, 30 year is what it says. So Max Life on case 1, case 2 looked very interesting for me. Exit condition was there. Maximum tenure to take the benefit was higher in Max Life because I wanted such a big term, right? So all of these thought process comes into the picture, and all of these things they actually help. And what you can do if you want a quick call, just click on term life, tell them what you want. Basically, I want life insurance, right? And then you can just go here and select a time slot, and they have pretty much very good time slots available. So I can just choose the time slot and you can get on a call with them, or you can just click here and go to WhatsApp and you can start chatting with them on WhatsApp as well. Now this is very important because one of the beautiful things I like about Ditto is they don't spam you with hundreds of calls like other companies, which is damn annoying. They have very unbiased honesty because they're just there to give you different options. In the end, they will tell you what is good, what is bad, so you choose from the options, right? They don't push some particular product onto you. And the other thing is, all of this is completely free. They don't charge you any money for consultation, and tomorrow if you have any problem or you want to do a claim and you've taken a policy from Ditto, they actually help you with the entire claim process as well. So all of these are very important when it comes to understanding your policy, buying a good one, and actually using it in the future. Now if you want to know more about Ditto, I'm going to leave the link in the description for you to check it out. Now I want you to understand my thought process. Now I've shown you everything, so let's understand why I did what. First thing, why did I choose 85 years of age instead of 60-65? Even though 60-65 is better, why did I choose 85? I had this fear that I might live till 60-65, and I have this fear that I might not have enough money or build enough net worth for my family. So I said I want to be a little safe because see, today I'm earning good money, tomorrow I might not earn good money. So I want to finish off when I'm earning good money in this next 10 years. I feel I'll earn good money. So I want to just pay off this very high premium, which I can today, and close it off so that till 85, I at least have one policy which is completely safe for my family. Maybe the next one I would not take till 85, I would take till 60-65 and reduce the complete premium on that as well, so I don't have to pay too much. So that was my thought process on this. Now second, why did I not select all add-ons, right? Now a lot of add-ons are there. You have to choose the add-on that is useful for you. Sometimes the add-ons will make sense, sometimes the add-on doesn't make sense. So I've taken critical illness because I'm scared tomorrow if something really goes wrong and I can't earn money at all, then I need some money to survive, right? So that is the why I have chosen that add-on. Now please understand, the more add-ons you add, the more the premium goes up as well. So that is again very important. Okay. Now the third question is, Shashank, you said this entire premium paying term is 10 years. What are you going to do after 10 years? Now after 10 years, I'm going to reanalyze my entire net worth, right? I'm going to say, okay, I have a 4 crore policy, medical insurance is sorted. How much do I have in my bank? How many real estate assets do I have? And how much market investments I have? Now I will look at all of this and say, tomorrow, if something goes wrong right now, will my current family, with whatever my current standard of living is, are they going to be completely safe? Or do I feel that, if my son wants to go tomorrow to Harvard and I have to pay 1-2 crores, will they be able to do it or not? Will that become an issue? So I calculate all of that. I put compounding and check if I get just 12% compounding and I calculate all my net worth today invested, and will it grow at that point? Will it be enough? If I feel, Shashank, no, I think you're short of maybe 3-4 crores or maybe at least 2-3 crores extra hota, so you would be completely fine. After 10 years, I would again take another insurance policy for maybe 2-3 crores, not 4 crores or 5 crores, maybe a smaller one. And this time maybe I might just go for a longer payment, right? I would just say every year I'll just pay a fixed amount. I don't want any return of premiums, and I'll just keep it till 60-65, or max I'll push it to 70 if I'm feeling a little scared. So that is how I'm looking at the entire process. Now, as I said, when you buy an insurance policy, you have to have all of these things in your mind. You can't just simply put one bucket and say, okay, I want this, 1 crore is great for me. 1 crore might be great for you, but first you calculate your liabilities, your personal expenses, your future expenses. That is something nobody calculates. Everyone looks at today's expense. Calculate your future expense. I'm already thinking the highest expense scenario, right? Fancy marriage, maybe Harvard education. So are they going to be fine if today they get 4 crores in their hand and they invest somewhere, whether it's different asset classes, at 12% compounding? Will it be enough? If I feel no, then boss, I'm going to top it up because my lifestyle expenses are going to go up. But at the same time, my salary is also going to go up over time, right? So if my salary goes up over time, then I can afford to take a higher premium later on. Now, ideally, it's best to take premium when I'm young at this age because the premium is going to be less. The minute I hit my 40s, the premium is going to be higher. So that's why I'm trying to push the highest policies right now as soon as possible so that later on I can take, lower term, lower premium paying policies. So that is my entire thought process of buying a life insurance and how I evaluate life insurances. Now, maybe if you are interested, let me know in the comment section below. I can make a separate video on how I analyzed my medical insurance and what medical insurance I have and how much cover I have. Now, again, all of this is only for education, right? So that you understand what are the thought process I'm going through, how I calculate things. You've heard a lot about stock investments, but I'm also doing a little bit of personal finance also for you guys to understand. And if you liked it, please click on the like button, share this with your friends, and also click on that red button, which is a subscribe button. And this is me, Shashank Udupa, signing off. Take care. See you guys. Bye.